Welcome to the Profit Strategies Weekly Podcast. Now, here's your host, Tom Gentile.
Hey everybody, Tom Gentile. I want to welcome you to, once again, another week of Profit Strategies. Glad to have you here. Now, typically, I have Chris Johnson sitting in with me, but Chris couldn't make it, so I have a fantastic substitute. We'll talk about him in just a second here. But once again, guys, we do these podcasts weekly. I want to also let you know, for those of you that asked, they are available on Spotify now. So you don't have to get it just on the YouTube channel that you might be watching it or listening to it on. We also offer these on Spotify. Glad to have you here. What another week. This was a very interesting one where when I look at what's going on in the markets, I mean, the S&P, for instance, trying its best to get back up there and get ahead of the Monday meltdown that happened last week, not last Monday, the Monday before that, with the announce of vaccines. And I'll get to that in a second. But the big news this week was not stocks. All right. It wasn't the bond market, even though the bond market's kind of been making those lower highs, lower lows. It's done a little recovery this week on its own. It's not the US dollar, which has been collapsing. And what I mean by collapsing is it's down near its lows of the year. Since the highs that we saw the US dollar put in back in March, it's just been a literal sell-off. Not the oil markets. You know, oil markets, we've been talking about being in more of a bearish seasonal trend. They have kicked up because everything's going to kick up if the U.S. dollar goes down. And it's not gold that I'm talking about because gold's really kind of flirting with support levels right now. I mean, it is down on support if you look at gold prices and look at GLD. No, what I'm talking about is cryptocurrency, and more importantly, Bitcoin, which reached and got above the 18,000 levels. And here's the interesting thing, for the most part, it's been holding that. So what once was a resistance is now trying to base as a support. All right. So you've got cryptocurrencies, microcurrencies are just killing it too. There are certain microcurrencies that were up in a 24-hour period of 25% or so. Just absolutely crazy. But a lot of this hinges upon the uncertainty we're going into in terms of the election, which depending on which candidate you talk to, they said they want it. I think that we'll get some more clarity as we head into and out of the Thanksgiving holiday, and more importantly, as we head into December. But a lot of this is also hinging upon new numbers that are coming out with higher and higher coronavirus cases. We hit the 250,000 mark this week on number of deaths. And what is concerning, which is pushing its weight on the market, isn't so much that hospitals are getting bombarded with new cases and ICU rooms are filling up. What's concerning the markets is whether or not we're going to get a new round of stimulus. And it sounds to me like the stimulus checks are not going to go out until next year. If they do, but the Fed has the ability to continue to push and inject liquidity in the system, and that is what's causing the U.S. dollar to go down, and that's what's causing uncertainty. And really the big thing that's happening is you've got alt currencies, these cryptocurrencies, microcurrencies that have been moving higher on this news. Now, again, this is all based on really the big thing is what's going on with coronavirus. We've had Pfizer and Moderna, they've released their COVID-19 news, all right, and how well their vaccine efficacy rates are going, and now both are hitting close to the 95% efficacy rate. And so this is actually some great news, which is really helping to keep the markets higher, because the stock market's not about today. You know that. It's always about the prediction of tomorrow. And so I wrote an article. This is what I want to talk about today on our podcast. I wrote an article earlier this week on rising sectors to put you ahead of the crowd before 2021. And before 2021 means right now. The guy who was instrumental in helping me put this article together is with me on the podcast today. So please, everyone, put your hands together because I know we can hear you through the podcast. Welcome, Mike Wade. Mike.
All right, Tom, it's great to be here. Thanks for having me.
Hey, if there's anybody that I can have in Sub and Chris, it's absolutely you. And you know, you do a lot with me with education, publications, etc. But you put a lot of information together on these sectors.
Mhm.
And tell me, are all these sectors moving higher right now, or are they dumping, or is it a bit of both? What's going on?
All of the ones that we put in the article are all rising right now. And there's really two main categories. There's the sectors, Tom, that have taken it on the chin like the rest of the market did in Q1, Q2, like energy and airlines and financials, hospitality, anything travel related. Those stocks tanked and went sideways pretty much as the rest of the market recovered. So those three sectors in particular, energy, airlines, and financials, have yet to recover and are already starting to move up with this news from Moderna and Pfizer. So I think those are three areas to start to look at. We can trade.
Perfect.
Yeah.
Absolutely. So let's start, Mike. Let's start with energy. Because the energy sector has just gotten pummeled this year. You've got, the supply. I wouldn't say the supply has been rising a lot in oil, but the demand certainly isn't helping alleviate that supply. With now we've got more potential lockdowns coming.
Mm-hmm.
People in certain counties, in certain cities, in certain states are imposing their own version of lockdowns. Who says the mask works? Who says the mask doesn't work? It just doesn't. It looks like we're going into, as they used to say on Game of Thrones, winter is coming, and they weren't talking about the weather.
Right. That's right.
So let's talk about energy. What do you see happening in the energy sector, and what do you like?
Well, I like, first off, there's a way to trade. The article was really focused around the sectors that we could actually trade with an ETF. All right. So energy is one. XLE is the sector spider ETF for energy. And XLE is down 40% year to date, whereas most of the market is setting new highs. Most of the sectors are doing pretty well along with the market. Energy was down 40% year to date. So talk about pent up demand. Once people come out of lockdown and COVID gets arrested, we can expect XLE as the ETF itself to return to higher heights. So I'm looking at least a 40% rise over the next handful of months, and it's already risen in the last couple of weeks, especially with the news from Moderna and Pfizer.
Yeah, I'm looking at a chart right now. So at the beginning of the month, XLE was trading below 28, and just in the last couple of weeks, it hit a high of nearly 37. So I mean, that's already a good 40%, am I right? 40% bounce off the bottom.
Yeah, absolutely. And it's happening on volume as well, Tom. If you look at a volume chart underneath, you can see the volume was really way above average, signaling that the investment community is back into oil. So there's a couple of performers that are really, a couple of oil companies that are doing better than the others. And Baker Hughes is one of them, Devon Energy. Both of those two stocks are really already just taken off. BKR is Baker Hughes, and BVN is Devon. So those
right. And if I could just let me go back to XLE for a moment, so that I can tell the listeners that and you said it once, but I want to reiterate it. So XLE is like an ETF. All right, so it's a basket of energies. XLE was down 40% year. It as of the article that you helped me put together, down about 40% year to date. But that wasn't the lows for the year. The lows for the year took this thing down in the low 20s, and that was back during the COVID crisis in March. Mm-hmm. So although we didn't get down to those levels, we were certainly close about a little bit less than a month ago before having that big pop. Now, what I see, for those of you that can't see this, so I'm going to tell you, what I see is we're sitting on an area of support right now, or resistance right now. If we can get above and close above that 36 area, and we're very close to it right now, then I do see XLE running up into the mid 40s. So that's a great number to aspire to. not only for the energy sector, but for it as an investor as a whole. And you could look at options. You could look at different call strategies, call spread strategies. Maybe if you really like the sector, instead of buying the stock, you could sell the puts right there around that at the where the stock is right now, and look to possibly acquire the stock at a lower price. These are all viable strategies to do. But XLE is definitely very liquid. I've traded it on numerous times. And so, of the three, it probably has the best liquidity, just simply because it's something that's out there that everybody in the energy markets know about.
Tom, I would tell my mother to buy XLE. I think this is one of the best probability trades going right now.
I would tell my mother-in-law to buy it, but she probably wouldn't understand half of what I said, seemingly as she's Italian. Let's move on to another sector, Mike, that we talked about. And what do you want to? You want to pick up healthcare?
Healthcare, yeah, we could. Let's talk about healthcare. Obviously, Pfizer and Moderna, once the vaccines are in circulation, well, they're already starting to rise. They're quite volatile though at the moment. But the whole healthcare sector, the symbol for the sector spider for healthcare is XLV as in Victor. And that just hit an all-time high last week. On the Pfizer news, the sector hit an all-time high right around 114 and 41 cents. So right up around 115, has pulled back a little bit, but we can expect this sector to rise, especially as the vaccine becomes available. And think about the administration of the vaccine, other health companies that are going to ride the ride. There's a pent-up demand for 7.4 billion people to grab this virus. So I just see it as a really strong sector. And having just set an all-time high, it's testimony to there's more upside, in my opinion, anyway.
Right. And you know what? I'm not going to disagree with you on one thing. I mean, when that information came out on the 9th of November, I believe that was when we first heard about the vaccine. That was Monday the 9th. It was. I remember it was 7 a.m. I remember looking at the markets, and all of a sudden we had this huge jump in the futures markets before the stock market opened. It was. We haven't hit the high since then. I mean, it happened with Pfizer. It happened with, and it's happened with XLV too. XLV hit a high on Monday, November 9th of 114, and is traded back down below 110. It's possible. When I look at Fibonacci ratios, kind of get a read of where the retracement may be. I mean, we're hitting retracement lows right now, but we could go down, around the 106, 107 area and tag that before we start to buy the news, because it's been buy the rumor, sell the news. But the news, as you say, is still yet to come out. And I do believe in the long run, this is going to just do nothing but benefit the healthcare sector as a whole.
Absolutely. I totally am with you 100%. So one way, Tom, you can trade the sector itself with these ETFs we're talking about, but you can also look for the leaders of the sector. That's another sort of approach to maximize your return. So there's the sector, and then there's the leaders of the sector, and those tend to outperform a well-performing sector. So there's plenty of good stocks out there. Align Technology is one that I like. DaVita as well are two that have already started to really take off to the upside. So XLV, Align, DaVita, all good healthcare plays between now and the end of the year, I think.
Yeah. I mean, there is a and when we first talked about energy is one of those how low can you go sectors, and then we jumped to healthcare, which is buy the high, because that's what healthcare has been doing. So let's go back to a really crappy sector. And let's talk about airlines. And airlines are part of the travel sector. But when we put this article together, we wanted to get out of just travel and focus specifically in subsectors when it came to travel. So airlines, we saw. I mean, last year, when you're flying, whether you're flying up front or whether you're flying in the back. I mean, even domestic travel here in the U.S., let's not kid ourselves. That's just one notch up from coach. All right. If you really want to experience great air travel, you got to get on a flight like Singapore Airlines. and there are several other ones out there.
Cathay
Some in
Pacific.
the Middle East are fantastic. And you'll see what it really is like. They're almost, some of them have apartments in the sky. But now let's talk about the U.S. for a moment. The U.S. does not have an apartment in the sky unless your apartment is a studio in Manhattan. That would qualify in first class. But think about this. No one had any trouble, other than the inconvenience of sitting in the middle seat back in coach. I've had to do it. That I still do sometimes. Well, not now, but I did sometimes, because if you wanted to get somewhere fast, sometimes you just had to take whatever seat was available. That is not the case this year. In fact, Mike, our programmer, John, who you know very well, I saw him. This guy loves to cruise. He was on a cruise when the whole COVID thing went down and his ship was forced to turn around and come back. And then he got on one of the only flights that was available, but he and his wife were the only two on the entire aircraft, along with the flight attendants and the pilots. And that picture was quite interesting because he and his wife could spread out anywhere in the plane. But you know what I saw? I saw the demise of the airline industry with that one picture. And we saw that happen and unfold. But, you've done some great research here. And what's been happening with the airline index and some of the airlines themselves recently?
Yeah, good question. So I'm going to speak from the ETF, the XAL. It says the American Express Airline Index, and its high of the year was 113.78. It crashed by March the 18th. Within less than about a month, it crashed all the way down to 33, 113 down to 33. Made a run up to 75, which is about half of it, recovered almost half of it. And that was in June, and has since just gone sideways. It's been flat. And when Pfizer came out with their news on 11/9, the ETF gapped up. We got what's called a golden cross on the 50 200-day average. And right now, Tom, it's at 75, which was the high that we had on June the 8th. And we close above 75. I think we're going to see a big run in airlines. XAL looks really good above 75.
I'm looking at that, and Mike, I want to let all of our listeners know that are option traders that XAL does not offer options. So in the case of how do you want to play this as an option trader, what do you suggest?
Well, I would pick a couple of the leaders in the airline industry, and obviously Delta should be on the top of most people's list. It's one of the healthier airlines. It's international. DAL is the symbol. Delta, similar pattern to the XAL, is actually above the high that it was back in June. So this thing's already broken its recent resistance level. So I like Delta, Tom, and on the domestic front, Southwest Airlines is one of the healthiest domestic airlines that we have, and it is.
It's amazing if you look at Delta, and I'm looking at a 100-day chart on Delta, and I know that unless you're in front of a computer, for those of you that are listening, you can't see this. But if you look at just a 100-day chart, that takes you back to July. This thing looks like it's in an uptrend. Literally, the lows are in July and August. The highs are what we see right now. But you got to go back 250 days to see what happened if you just really had your head under a rock for this year and not know, because Delta was once a $60+ stock that dropped all the way down below 20 before rebounding. And what's interesting is now we're at the 30, we're in the high 30s now. All right. So we're in a crucial area. We are now above a lot of support, and there's no resistance on Delta. Mm-hmm. This is technically, I'm not talking fundamentals, but technically there is no resistance until you get to the high 50s. That's what I see. That's what Mike sees. That's part of what went into this article as to what we see the airline sector's doing.
Yeah.
So Mike, that puts us into number 4 of 5 sectors to look at. And we want to look at microchips and the chip sector. The chip sector's actually been really strong this year. You've got some. Everyone thought, well, COVID's gonna kill it along with everybody else. But the work from home, stay at home, work from home piece has really pushed the chip sector on fire. And even the U.S.-China trade war that really just hasn't stopped it. So talk a little bit about the chip sector and what you like about it, and then how we can trade it.
Yeah, good question. So the chip sector has risen in the face of the U.S.-China trade war that's been going on.
Right.
And what's expected is with Biden as president, which looks like it's a good chance that's, who knows what's going to happen. But if Biden does ultimately become the president, it's expected that he'll loosen the grip on China a little bit, and that will allow the tariffs to drop, the cost of business drop with all the chip manufacturers and those that are using chips here in the U.S., like Apple Computer. And we're expecting there to be an influx of money going into the chip sector with a Democratic president. So that's
and a sidestep too, Mike. Apple was one of those stocks that's also going to benefit from what we call the holiday buy. We're going into the holiday season. The holiday season, typically people think of Black Friday as the time to start trading the holidays, but the recent data that I have suggests that pattern is starting now. It's not waiting until next Friday. Everything's shifting forward because of Amazon and because of online shopping. And Apple is one of those companies that seems to benefit. They just came out with iPhone 5. I call it iPhone 5. I don't know why I keep calling it that. It's the iPhone 12 with the 5G. But more importantly, last week they just started the pre-orders on the iPhone 12 Max, the Pro Max, which is where I believe they're going to sell more of the Pro Max than they will the Pro because it's got a larger screen. And I know of many females in my family that have pre-ordered that iPhone 12 Max because bigger is better. They don't store these things in their pockets like you and I do. They stick it in their purse. And I don't have a pocket big enough for that iPhone 12. And if I did and I sat on it, I'd probably order another one. But look at Apple as not only a benefactor from the chip sector, but also a benefactor from the upcoming holiday season, which brings us to our last sector of the 5. And Mike, do you want to usher it in?
I will usher it in, and it's financials. Financials has been one depressed sector since the virus tanked the market. It's similar to energy. It's been going flat. It's been flat since it's recovered about half of what it lost. But that all changed on November the 9th when Pfizer came out with their news and the stock gapped up. The stock I'm referring to, Tom, is the XLF. This is the financial sector spider financial ETF, and it gapped up. Now, why would financials gap up? Well, think of it. Stimulus package seems destined for us in the early part of the year. Cost of money is low with low interest rates forecasted for at least a year or two into the future. So it just looks like we're just going to have a really healthy financial sector. It's going to start to recover, more loans for banks, et cetera, more people using credit cards. So that particular sector has it was channeling until November 9th. And then after the news, it's gapped up above previous resistance. And it looks to me, Tom, like there's it's all full steam ahead to the upside. It's looking good. Right now it's trading at 27 or so, and the recent high was the all-time high was 31. So we're heading back in that direction.
And what's something else that's interesting about the financials too is that what's hurting the financials right now. What's the one thing that could keep it down would be the U.S. dollar if the U.S. dollar to drop. But there's some traders out there that think the U.S. dollar is now undervalued. And if we get a kick up in the U.S. dollar, that would hurt the overall stock market. But I think it would be a benefit to financials, especially banks and brokers, which tend to do well with a higher interest rate. So
right. So there's a lot out there, Tom. It's a good time to be trading. It's all of these, each of these 5 sectors looks exceptionally strong to the end of the year and also into next year.
Yeah, I agree with you. And this couldn't have come at a better time because many of these sectors, and stocks within these sectors are going to benefit from the potential holiday bump that we're going to be seeing as well. And so, Mike, hey, thanks for joining me on this program. I'm glad to have you come on in. We're going to have you back again sometime soon.
I would love to. Thanks for having me. I've enjoyed it.
Awesome. And that was Mike Wade. He is chief technical strategist over here with me, and love having him on here as he is very instrumental in putting a lot of data together for me, and just does so much. Love having him on the program. He's also instrumental in our education that we offer as well. So, guys, I want to thank you for being with me this week for our Profit Strategies Weekly podcast. Again, like I mentioned at the top of the podcast, we're now podcasting and streaming on Spotify. So you can check that out. Go to Spotify.com and you can download the podcast and have it ready to go for you each and every week. We're probably going to be doing an early edition of this next week as we're heading into the Thanksgiving Day week. So look for our podcast to come out, our next week's podcast to come out a bit early. All right, till then, have a great rest of your weekend, and otherwise, and we'll see you next week. Bye now.